Hello, Market Club members and traders everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And it's round two, yes, another day. But let's take a look at what's going on in the marketplace. Yesterday was just a crazy day, historic day, 3,000 point swings in the Dow, never seen before. But we are seeing some things that sort of make sense to us now. So this is a chart of the Dow, and you can see basically this is the last 5 days. Well, it's a little more than 5 days, but starting from here, this point right here, the last 5 days, you can see it's just really just a straight down type of move. And today's move is nothing to get excited about. Trust me on this. What we're looking at is, we talked about a dead cat bounce, and a dead cat bounce is nothing more than a bounce in a negative longer term trend that is going lower, and that's what's happening right now in my humble opinion. So here, this low right here, the 15.4 low on the Dow, that is going to be a low for a little while. So what I expect will happen is that we're just going to see the market sort of just vacillate around and then eventually turn back down. So the question is, how far could a bounce get? How far could a dead cat bounce get? And this is what we're going to do. We're going to clear the screen, and we're going to look at our Fibonacci tool, which is right here. And you click here and it shows you a little yellow box. It shows you it's live. And I'm just going to draw it from the very highs, drag it down to the lows, and you can see right there we've got a 50% correction at 16,460 and a 62% or 61.8 to be correct at 16,719. So they're the levels I would think if you're going to see something. I think it's going to be closer to this level, the 50 level, as opposed to this one right here. So I think we're going to see 16.5 maybe as a resistance level for a dead cat bounce. Let's see how that plays out. But generally speaking, look at it very clearly. The trend is down. It has been for quite some time. You can see our monthlies kicked in at 17,579, and they haven't changed. Pretty much the same picture in the S&P 500. All of the trade triangles are down. Strong downtrend the last 5 days. Boom, 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 boom. Except for today, a little dead cat bounce. And we're going to do the same thing there. Measure from the highs. Must have the yellow box for the Fibonacci tool to be live. Down to here. And pretty much the same thing. So I would say the 19,850 level is going to be a level that's going to stop the market. 1,985 is going to be an area that's going to be a problem for this particular index. That's a 50% retracement. I do not think we'll see a 62% retracement in this market. On the NASDAQ, a little bit of a different picture here. The NASDAQ has been the strongest because of the technology, but we'll draw the same exact Fibonacci tool from the highs, draw it down to the lows, and you can see right there it's getting very close to the 50% level there. The NASDAQ actually may go up to the 62%, 61.8% at 4,790. Let's call it 4,800 roughly, but I think that's going to be where the market's going to find really like a brick wall. I don't think we'll see the market absolutely not go over this area right here, the 4,800 level. So generally speaking, I would look for the market to trade around and then eventually get tired and roll over. Remember, if you look at some of the indices for the year, they didn't really go anywhere. They sort of just meandered back and forth for the whole year, and then suddenly, boom, China wakes up and realizes it's a house of cards and collapses, and that's a contagion that goes throughout the world. So let's move on. Okay, this is the Eurodollar, which is, we've been bullish on the Eurodollar. It's worked out very well for us, but right now we're seeing here we have the previous candle right here, but you can see it is practically engulfed with this today's candle. This would be a dark cloud cover, which means it hasn't completely gone. If it went down like this, for example, that would be a bearish engulfing line. And the next day, if it was to close lower, it would confirm that this is a top. But right now we have a dark cloud cover, which would also call for a top if it is closed low. But the trend right now is positive. You can see it. We're 90 on our trade triangles, and we still like the looks of the euro against the dollar. Gold a little bit mixed. You should be out of this market. You can see where our signal came in at 1,147. It's around that level right now. Generally speaking, the market has made a turn. The weeklies are still positive, so we're looking for a daily little triangle right here to kick in and turn green to get us long again. But on the moment, we're on the sidelines in gold. Crude oil, nobody seems to like this market, but eventually, as I mentioned before, with the RSI, which is right here, we talked about the RSI, which is right here, you're going to see this market basically bottoming out. It's very, very flat here, very flat, and this is going down. And I think, generally speaking, not to say it can't go lower, but eventually we're going to see this market reverse, just like we saw the euro reverse, just like we saw the stock market reverse. Nothing goes up forever, and nothing goes down forever either. Just remember that. Okay, we're looking at some stocks that really got hammered yesterday, but here's the reality. This is Amazon. This is a juggernaut. This is a huge, huge company selling billions of dollars of material and goods across the internet. It just moved to a trading range. The monthly is still positive. Now, you should be out of the market right now. You should have been out on this day right here a couple of days ago, 3 days ago, at $513. So that's still $33 ago. Let's give this market some time, but let's keep an eye on it, because I want to be a buyer of Amazon when the trade triangle weekly turns green. Same with Netflix. The monthly trend is still positive. The weekly is really just flattening out. You should be out of this market. Same time window, 103. It's pretty much where it is right now. Generally speaking, give this market some time, but keep your ammunition dry. Netflix is a juggernaut, just like Amazon. These are good, strong, solid stocks and will do very, very well in the future. But we want to see a buy signal. That's the key thing. Hey, we've covered a lot of things today. Appreciate your time. Thanks for watching. Be careful. Use stops. Use discipline. We've talked about that. It's the key to being successful in these markets and any markets in the future. I'm Adam Hewson for Market Club. Have a great trading day.